Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. July 21 Market Review, Tech Rebound, Earnings, and Geopolitics. This video presents a direct informational narration of the source document. So diving right into it, the source document notes a collective rally in U.S. stocks on July 21st, specifically across the tech, space, and crypto sectors, alongside a really solid pre-market rebound in Japanese equities. We've got a lot of ground to cover today. We're going to hit the macro market and tech rebound, then look at global trade and geopolitics, move into Q2 corporate earnings, check out crypto and alternative assets, and finally wrap up with M&A legal developments. Starting off with Section 1, Macro Market and Tech Rebound. Despite facing some heavy pressure from high international oil prices and rising 10-year Treasury yields, the broader S&P 500 still managed to rally. But it's not all green lights. The NASDAQ 100 actually remains below a pretty critical short-term threshold of 29,265 points. What this means is that CTA models are going to keep facing tech sell-off pressure unless the index reclaims its 50-day moving average. So, what are the big institutional players thinking? The source includes some interesting commentary here. JP Morgan's CEO is actually expressing reluctance to enter the market or long-term treasuries at these current valuations. Meanwhile, Goldman Sachs is actively advising a shift away from those crowded AI trades and over to consumer stocks. Now, over in South Korea, the Kospi rebounded 3.6%, and the customs data really highlights why. They reported exports from July 1st through the 20th neared $55 billion. That is a massive 52% year-over-year increase. It's being driven heavily by global semiconductor demand, where export volumes actually reached 2.8 times that of the previous year. Moving on to Section 2, Global Trade and Geopolitics. These markets don't exist in a vacuum, so let's look at the policies and tensions actively shaping them. Right now, we're watching two major global developments. First, a 10% U.S. tariff rate expires this Friday, and new tariffs are fully expected. At the same time, over in the Middle East, Iran's proposed 10-day ceasefire is facing internal political friction, and that specific instability is exactly what's keeping WTI crude oil near $85. All right, let's pivot to Section 3, Q2 corporate earnings. We got some fascinating financial results and guidance updates here. Take SMCI, for instance. They projected Q4 revenue near the bottom of their $11 billion to $12.5 billion range. But here's the kicker. They revised their gross margin guidance up significantly. They moved from their original 8.2 to 8.4% estimate all the way up to 15 to 17%. This incredible leap was supported by new orders exceeding $60 billion. Elsewhere, it was a pretty mixed bag. Northrop Grumman lowered its 2026 revenue outlook and actually dropped 38% from its $770 peak. Then you have MSCI, which reported 12.2% revenue growth and an 18.5% bump in adjusted EPS, but still gapped down on higher costs. On the flip side, 3M gapped up on 2.4% sales growth and an 11% increase in adjusted EPS. General Motors had a really strong quarter, reporting $48 billion in Q2 revenue. They notably achieved profitability in the Chinese market for 7 consecutive quarters. And based on that momentum, they've officially raised their full-year earnings per share guidance. Keeping with the automakers for a second, the document notes that Ford's entry into the battery storage business previously sparked a massive 57% stock rally. That rally peaked back on May 29th before retreating. That brings us to Section 4, Crypto and Alternative Assets. Let's see how this sector reacted to the recent macro data. After 8 brutal weeks of consecutive ETF outflows, the tide officially turned. Following the July 15th CPI data, which weakened the bets on a rate hike, U.S. spot Bitcoin ETFs experienced 5 consecutive days of inflows, pulling in a total of over $600 million. And you can see this bleeding right into related equities. Coinbase gapped up 9.6%, and Robinhood rebounded 7%. We also saw CIIR surge over 50% in just 3 days, and NBI surged right after NVIDIA disclosed a 9.3% equity stake. Finally, let's wrap up with Section 5, M&A legal developments, where some major media acquisitions are hitting serious roadblocks. So, looking at the media sector, 12 Democratic state attorneys general have filed a lawsuit under Section 7 of the Clayton Act.
This legal action is essentially pausing Skydance's disruption of Netflix's acquisition of Warner Bros. Discovery.
And delays like this are incredibly costly. The document concludes by noting that if the transaction is delayed, Paramount is required to pay Warner Bros. A delay fee of approximately $650 million per quarter, all pending the outcome of the midterm elections.